Hello everyone. So in this video we will discuss 2015 6 marks question. Okay. Now calculate purchase consideration. Look at here, they are asking us to calculate purchase consideration and pass opening entries. See, opening entries or incorporation entries. Please keep in mind that is nothing but step number 4. Calculate purchase consideration and pass opening entries. Opening entries. See the books of purchasing company. Please keep in mind step number 3 is related to vendor company and step number 4 is related to purchasing company. So always under purchasing company, you have to pass incorporation entries and you need to prepare balance sheet. And look at here, they have given value of assets as per balance sheet. Look at here, value of assets as per balance sheet is how much? 50,43,140. And agreed value of assets taken over is, look at here, agreed value assets taken over is 36,43,140. And liabilities as per balance sheet is 6,43,140. And liabilities not taken over is 43,140. Purchase consideration is to be discharged in equity shares of rupees 10 each. Now this concept is very important. Okay, what you are supposed to do is, okay, first one, you have to identify whether this question will come under amalgamation in the nature of merger or amalgamation in the nature of purchase. I've already given the 5 conditions. What is it? 5 conditions to, okay, uh, 5 conditions to identify whether it is an amalgamation in the nature of merger or amalgamation in the nature of purchase. What is the first condition? All assets and liabilities need to be taken over. All assets and liabilities need to be taken over. Now we look at the question now. See, value of assets as per balance sheet is 50,43,140. And agreed value of assets taken over is how much? 36,43,140. That means they are not taking over the balance assets. So it is on from the first condition only we got to know that it is not a merger. It is not a amalgamation in the nature of merger, or it is not a pooling of interest method. So it is clear that this method will come under amalgamation in the nature of purchase. Look at it, the amalgamation in the nature of purchase. We have to pass incorporation entries now. And if you have doubt, we look at the question. Liabilities as per balance sheet is how much? 6,43,140. And liabilities not taken over is how much? See, they are not taking over liabilities. So this question is, we need to calculate PC and we need to pass incorporation entries under which method? Is it amalgamation in the nature of merger or amalgamation in the nature of purchase? It is clear that amalgamation in the nature of purchase, because a few assets and liabilities are not taken over. Now, so we are done with, we have identified always for 6 marks and 14 marks, you have to identify the question like this. We are done with identification of method. The second one, we need to calculate PC. For calculating PC, you should know whether you have to calculate PC under lump sum method or net asset method or net payment method. What do you mean by lump sum? In the question itself, the purchase consideration will be given. Here they are not given, so it is not a lump sum method. What do you mean by net payment method? See, what they have given, they should give the mode of payment. That to full information. They should not give partial information. What they have given, purchase consideration to be discharged in equity shares of rupees 10 each. See, they have given whatever the purchase consideration we have, that amount should be discharged through equity shares of rupees 10 each. But they have not given number of equity shares. They have not given amount of PC need to be discharged. So it is not a net payment method. There are only 3 methods: net asset, net payment, and lump sum. So it is not a lump sum method. It is not a net payment method. Then it will be a net asset method. Now first we need to calculate PC. Okay, calculation of PC. Calculation of PC. And that. So what you have to do, you have to write assets taken over. Assets taken over. Assets taken over is how much? You have to write the amount. So though the book value is 50,43,140, but here you have to take only 36 lakh, how much? 36,43,140. Correct, no? And less liabilities taken over. Liabilities taken over. Now liabilities taken over is, so we need to minus liabilities. Okay. So less liabilities taken over. Look at here. The total liabilities as per balance sheet is 6,43,140, whereas they are not taking over 42,140. So what you need to do? 6,43,140. See, assets not taken over should not be considered. Only asset, sorry, liabilities taken over not, it should not be considered. Only liabilities taken over should be considered. If you do, how much you will get? You will get 6 lakh. So if you minus these two, how much you will get? So 3,43,000. What is that? PC, purchase consideration. So 30 lakh 43,140 is the purchase consideration. Next, we are done with PC, and they're asking PC is discharged only through issue of equity shares. Next, what second step is? Step number 1 is calculation of PC. Step number 2 is discharge of PC. Discharge of PC, you can directly write equity shares. Equity shares of rupees 10. See, they are not given number of shares. What you have to do? So 30 lakh 43,140 divided by equity shares of rupees 10 each. So totally the company is issuing how many equity shares? Is issuing 30,000, sorry, 3 lakh for 4,314 equity shares of rupees 10 each. So if you multiply with 10, so how much it will get? The total amount will be how much? 3 lakh 4,014 into 10 is the same amount you need to get. Look at here. Discharge of PC is how much? 30 lakh 43,140. That is discharge of PC. We are done with step number 2. We are done with step number 1 and step number 2. Step number 3 is not required because they are asking us to pass only opening entries. Okay. And you have to pass incorporation entries. Now we have already identified it is amalgamation in the nature of purchase. So what are the general entries we have? Look at here. Business purchase account data to liquidators of transferred company. The first entry should be business purchase account data to transferred company, and the second one is various assets taken over to various liabilities taken over to business purchase account, and the difference in the total debit and credit will be transferred to goodwill or capital reserve. The third one will be liquidators of transferred company account data to share capital, share premium, and bank account. Okay, now we will discuss. Now we will discuss incorporation entries. See, I already told you that the first entry should be business purchase account data to liquidators of transferred company account. See, that is nothing but whatever the PC you have calculated in step number 1, that is 30 lakh 43,140. The same amount you need to record. Okay, that is, look at here. Business purchase account data 30 lakh 43,140. Okay, to liquidators of transferred company account 30 lakh 43,140 being PC paid. The second one is assets taken over, liabilities taken over, and business purchase account. So assets taken over is 36 lakh 43,140. Correct? Now look at here. Assets taken over already taken under calculation of PC 36 lakh 43,000. Okay, minus liabilities taken. So liabilities taken over is how much? 6 lakh. So assets taken over 36 lakh 43,140. Liabilities taken over 6 lakh, and business purchase account is how much, which is debited here. So 30 lakh 43,140. The same amount you have to write. Now, if you total, see left hand side and debit side and credit side both will be same. So there is no difference. Suppose if there is a difference, now this is very, very important. Okay. Suppose if there is any difference, I'll explain with an example. Just try to understand. Suppose if assets are more, I'll give just an example. Okay. If assets are more, here, if assets are 40 lakh, okay, if assets are 40 lakh and liabilities are 6,000, sorry, right here. Liabilities are 6 lakh and what is that? Purchase consideration is just for an example, 32 lakh. Then look at here. The debit column is 40 lakh, whereas credit column is how much? 38 lakh, correct no? 38 lakh. Then we have a difference of how much? 2 lakh. That 2 lakh will be called as capital reserve. That 2 lakh will be called as capital reserve. You have to write under credit column, capital reserve. Okay, got it? Suppose if it is reverse. Now, if it is 30 lakh, okay, assets take only 35 lakh, whereas liabilities and business purchase consideration is almost 38 lakh. Then different credit column is more than the debit column. Then we will get this 3 lakh here. That will be called as goodwill. Okay, goodwill. So this is very, very important. Whereas in this question, debit column we have 36 lakh 43,140, and even credit column we have 36 lakh 42,140. So no capital reserve, no goodwill. I'll repeat again. When assets are more than the liabilities and business purchase account, we will get capital reserve. When liabilities are more than the assets, then we will get goodwill. Okay, being assets and liabilities taken over. And third one is business purchase account data. So same, which is here done. Okay. Sorry, liquidators of transferred company account, which is created here, 30 lakh 40,140 will be debited here to equity share capital. It will be discharged through equity share capital. The discharge you have to write here. Okay, done. We are done with. And here we don't have any realization expenses in this question. We don't have any realization expenses. So we are done with incorporation entries. So step number 1 is what? Calculation of PC. That is 30 lakh 43,140, and discharge of PC we have done. And passing incorporation entries, there will be three entries. Business purchase account data 30 lakh 43,140, two liquidators of transferred company 30 lakh 43,140, assets taken over, liabilities taken over, business purchase account. Here we don't have any difference, so no goodwill, no capital reserve. See, when it comes to purchase method, it will be called as goodwill or capital reserve. When it comes to purchase method, so merger, it will be called as general reserve. And next one we have, third one is liquidators of transfer company account, two liquidator share capital, two equity share capital account, 30 lakh 42,140, 30 lakh 1. Being PC paid. I hope the concept is clear, which has been asked in 2015 for 6 months. Thank you.